Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I've been providing technical stock research and consulting to institutions for the past over 30 years now. And in the last year or two, I started to provide the research to individual investors. What I do with the show is I start out with a lesson and then I go into the symbol requests that come through for the week. And I like to do some pretty in-depth analysis on what I'm expecting on those individual stocks. But let's go ahead and look at this agenda because I want to talk about the ADX for a second. This is really my favorite pattern because you can do it in any two time frames. The one I like the most is on the monthly and the weekly because it'll set up a situation where you could be getting in something that could go up and go up pretty quickly over the course of a decent amount of time. So it is a two time frame pattern. We want the higher time frame to have something specific that I'm looking for. I'm going to go over that. And then on the smaller time frame, we do need a sign of strength to show up before we can do anything with it. And then once we're done with that, we will go through the symbol requests. So I've got a chart of CyberArk software up. This is one of the stocks I was highlighting in my reports going back, about a month or so. And what I want to explain here, I have 4 time frames up, and I did that on purpose because I want to make sure you understand these patterns will develop on the smaller time frame, where maybe you have a pattern set up on the daily and a pattern set up on the hourly, and you can play them on those time frames. You could trade it, do it as a swing trade or something like that. So I wanted to bring that up, but I am going to focus in on the monthly and the weekly. And what we're looking for with ADX, we always want to start with the higher time frame, and I'm going to show you a couple things that I think are really important about this ADX setup. So we have a price pattern that is forming this saucer pattern here, okay? And during this period, starting in 2022, the ADX drops down under 25. Notice how it was really high here in 2019, and it kind of worked its way down. And then we go through a pretty serious corrective pattern, down move, whatever you want to call it. And ADX drops under 25 and it stays under 25 for an extended period. Now that alone is not a good enough setup. All right, just because the ADX is low is not a good enough reason to say, oh, I definitely want to buy this the moment it turns up. But if we do have one that's low and it's below both the DI lines, so I'm keeping the MACD up here for a reason, but if you look at what's taken place, really in 2023, for about 9 months, the ADX line was below both of the DI lines, and the DI lines all 3 lines have been below or were below the 25 line going across there for about a year. Okay, so these are things you want to be on the lookout for. All right, now that's one thing you can screen for in ADX and say, I'm looking for ADX low. I want it to be below both of the DI lines, and I want it to be below 25. And I like to look for it when those lines have all been below 25 on a monthly chart. It would probably be about a year, something like that, 6 to 12 months. I'm looking for something that's sort of like gone quiet. And what it's doing is building energy for a new move. All right. And when all 3 lines are below 25, we know that we have a low volatility, and we have low volatility and we have low trend strength. We're looking for both. We want low volatility and we want low trend strength. That's a premier type setup for a base. We want both of those to take place. And what that's doing is saying that the swings here are not that wide and loose. The size of the bars are not that significant. There's not a massive amount of overlap in the bars during this period. It's a pretty tight formation, okay? This is loose. See how loose that is? This is tight. You gotta go looking for this tight formation like that. All right, that's number one. Now, when I'm looking at this low ADX condition in place, and we're breaking the moving averages, and we have a flat here, and yeah, the 40's trying to hold, but it's really not. I'm going to go and look at the MACD here and look at what's taken place. So starting in late 2021, we were pretty far away from the 0 line, and then look at what happens here. We get right on top of the zero line after about a year and a half of correcting. We get this down towards zero. So we've worked off the overbought condition. We've worked our way back down towards neutral. We have a low ADX condition on this time frame, and we have kind of a quiet sideways pattern. So when I see this on the higher time frame, now I'm willing to go and look at what's going on the weekly chart. All right, once I see that on the weekly, on the monthly, then I want to go down and see what's going on the weekly chart. Now, if you notice what's taken place here, we had an extended period from middle of July of 22 through July of 23, an entire year, okay, where all three lines were below 25. And for the majority of that time, the ADX line was below both DI lines. You see what I mean? So you could go screening for this if you want. Now, what is that highlighting? Again, it's highlighting not a lot of overlap in the price bars, but also what I've found is that it finds the tight formations. This is what we're looking for, is these tight patterns, these patterns where we're not getting wide and loose type of basing, we're getting a quiet basing period. Usually when you're going through in a period of accumulation, it's more quiet, all right? The pools of money that are looking to get in this are not doing it in a way that are causing the market to move up dramatically. It's sort of a stealth accumulation process. We're moving from weak hands to strong hands. And in the process of doing that for this year, the stock is staying pretty quiet. We want to look for that. All right. Now, before we can do anything in this pattern, even though we've got low ADX condition here and low ADX condition here, we do nothing. All right. We need price to tell us to do something. And what we're going to do is we're going to make it break out. It's got to break out on the weekly chart. And once it breaks out, and that wasn't a perfect line, so it was right about in here where it started to break out. Notice what happened on the ADX. The ADX crossed above 25. We need to have some sign of improving strength before we have an interest in this pattern. Because we have low ADX in 2 consecutive time frames, we need some confirmation that there's strength coming into the market, because you can stay in a low ADX condition for a very long time. But once this starts to kick in, we can now start to play either a minor pullback, or we could play aggressive play would be buying the breakout pattern and then making sure that the ADX starts to kick in and confirm. So I a lot of times I would recommend looking for these low ADX patterns and going ahead and buying the breakout. And if it breaks out and it doesn't follow through, then maybe you just kind of move on. But if you get the confirming signal on an ADX basis, you can always buy the pullback after that, all right? So we want to look for these patterns because they're going to be, in a lot of cases, they're going to be explosive. And the reason is that you've got 2 consecutive time frames that have built up energy for a move. They're quiet sideways patterns that are setting up for a emergence to the upside. Now, a lot of times you might see these after this is already formed. These have both formed, and then you've already broken out, and you're just looking for a pullback to get in. That's fine too. There's nothing wrong with that. If you know that you have this setup in place, because look, if we've been going sideways for a couple years in a quiet low ADX condition on a monthly chart, the odds are the stock could go up for a couple years. That's the possibility in these, and that's why I really like to look for these for my client portfolios, for my institutions, because I know they want to get a hold of something and see if they can't be in it for the next year, 2 years, whatever. So this is a great pattern to be on the lookout for that specific setup. All right, let's go ahead and move on to the individual stocks. If you're enjoying the content, hit that like button and also subscribe. My research can be found at rabelstockresearch.com. I am about to release a new course for my trading school, so you might want to check into that. The prices are going to change after I post that up there sometime in the next week or two. Also, if you just want to get started learning more about my techniques, I would suggest buying the book. It's at rabelstockresearch.com/book. You can get more information. Okay, let's start out with the QQQ, and I want to focus in on the weekly chart just so I can show and follow up on what I was talking about last week and how we've jetted away from the 18-week. We are not testing the 18-week on a regular basis. It's not a consistent sort of test like we saw back in 2020 and 2021. Do you see the difference? This is not coming back to this line, and this line, it just this time it kept on coming back to test. This is where you'd expect a more prolonged trend on this time frame. Okay, and so on this time frame, I call it more like a surging market type of environment. Now, that can go on for a while. I'm not trying to say this is over, but what we want to do now is sort of convert up, and we want to move up to the next time frame and look at the daily chart, because this is essentially what this QQQ looked like in 2020, 2021 on the weekly. You see what I mean? We're testing the 18 over and over and over again, and it keeps holding. So one thing I'll tell you on this time frame, which I do believe is the driver right now for both the S&P and the QQQ, is we're testing this 18. It did get a good bounce. These lines still look pretty parallel. I don't see any real trouble there, but what I do notice is the MACD is starting to die off. It has diverged a little bit. Green DI is not making a new high with price, so we've got a little bit of a slowdown in the buyers. That's the green. Green DI shows the strength of the buyers. The red DI shows the strength of the sellers. Now, one of the things that showed up in the S&P that hasn't shown up on this chart is we want to look and see if this breaks above this prior peak on red. You see this line coming up through, that was the prior peak. If we can break up through 25, then we know that the sellers are starting to get a little bit more serious. And if a green DI breaks down below 25, then we know we've got a little bit of a shift taking place. That should coincide with a break of the 18-day. So as we look at that, I mean, I think a break of the 18-day that causes the 18-day to roll over increases the odds that we could actually go through a correction and maybe fill in some of this area on the weekly chart. So that's what I'm watching for right now. I'm not saying it's going to happen. I'm saying this is something you want to key on and watch and see how this handles this 18-day right now. All right, let's look at the IWM, because I think something important is potentially developing. If you notice, the NASDAQ is actually, the QQQ is actually down a little bit today. And at least to start the day, this is up 1.4%. And so we're getting a little bit of improvement on the small caps, and you can see the relative line. This black line is relative to the S&P. We're starting to see improvement here. We're crossing above this 200 mark. I'd really like to see this close above 200 for the week, and I'd have a weekly close above 200. And I'd love to see this black line cross back above the 30 MA of the relative strength, and potentially even take out this prior peak. If we can break out here and break out here, take out those two highs, I think that would be pretty convincing. And the reason why I keep mentioning this each week, the reason why this is so important is that it goes to, more a broadening effect and more stocks participating, and not necessarily having a concentrated move causing the market to go up. We want to see continued stocks, and so far it's been okay. We've gotten a little bit of increase in volatility lately, so we've got to be a little bit more on guard, but this is an encouraging sign what's taking place here. We just need a little bit more follow through, especially to finish the week. And I think that would be a pretty encouraging sign. All right, let's look at this SMCI. I've gotten a couple questions about this week. One was someone who's in it. Another just kind of asked what my thoughts are. And it's a little crazy how this has moved. I mean, look at this is just a huge move. And the fact that this has moved as much as it has in such a short period of time just sort of tells me that the analysts didn't realize what was going to take place in AI in any way, shape, or form. Just kind of wasn't expecting the amount of business and profitability. So you kind of have to make an adjustment here, like a reset, and say, you know what? I mean, it looks really extended, but I think these people got it wrong. So the way I'm looking at it is just like I talked about with the QQQ. Do you see how this is now jetted away? This is definitely a surging market phase. All right. Now, if we go to So on the QQQ, we want to use the daily. But if we go to the daily on this, look at what's happening. This looks like the weekly on the QQQ. You see how it's not testing on a daily basis? It's not happening on the daily. All right. We were testing it here and then it just jetted away. Now look at what's taking place on the hourly chart. So this is actually the controlling time frame here. This has been going on since really early this year. It's been testing the 18 on the hourly chart. That's where your entries are. I mean, you have to play this really short term right now. It's the only way I could use. I mean, I'm not going to buy a stock that is stretched away from its 18. It's just too much risk for me. Any kind of pullback would easily stop me out. So right now, the only time you're really getting entries, and I'm not saying you can't do it. I'm just saying this is the way I would go about doing it now. And if you notice what's taken place here recently, it looks like we're not pulling back. We're almost jetting away from this little channel we've got going and maybe jetting away from the 18-day. Now, if that's, the 18 on the hourly. Now, if that's the case, you're going to want to go down to a 10-minute chart and start doing it that way. And at some point, we will get a break, a significant break of the controlling MA. Right now, it's the 18 on the hourly, hasn't been broken. If we don't come back and check here, we're coming up on a big round number at 1,000. So I think this will be pretty important to watch. But if this jets away and decides to break through 1,000 and accelerate, it's probably going to be controlled on the 10-minute 18. So that 10-minute 18, you'll be getting pullbacks on, all right? And this could go on for a long time. I've seen this happen. I mean, in down markets, you see this quite often where it'll keep accelerating down to a really minor time frame and then eventually reverse. So something to be on the watch when you're looking at your individual stocks. See what is the controlling time frame. What is the time frame that has parallel lines, 18 and 40 parallel, and market keeps testing back. The stock keeps testing the 18 on a regular basis. When you have that, that's the time frame you really want to be trading on. All right. It's a really good little nugget there. I think you want to be on the lookout for. Okay, let's look at this FTNT. So pretty good reaction on the monthly chart. We've got a pretty big double bottom here, and it does qualify as a reverse divergence. The MACD made a lower high while the price is making a higher, this is making a lower low while this is making a higher low. All right, so the issue I've got is this big red bar on the monthly, and there's resistance up here right around 75 where we've made two tops. So we want to be aware of that if we're going to trade this. And there's really not, if you see what's happening right now, we've kind of jetted away from the 18, but it's not a sustainable. It's very possible this is going to start pulling back here soon. Right now, the only time frame that you've been able to trade is on the daily. You see I've been pulling back on a regular basis to the 18, but what I'd probably be looking for is a break of the 18-day and let these two lines kind of convert where the 18 crosses down below the 40 and we get an entry on the weekly time frame. I think that's what I would be doing here based on this big monster red bar. So this is a big monster red bar we're trying to get through the midpoint of. If we can do that, we're pretty close to doing that. If we get any more follow through here, I think you can play any kind of little pullback and enter it off the daily chart. But not a bad looking pattern. I just think we've got some resistance to deal with that needs to be overcome. Okay, let's look at this SFM. So you can see what's going on. We were getting pullbacks to the 18, and now it's stopped doing that. You see that? We've jetted away. Now we've got great momentum behind this, and this is a huge base. You see the size of this base? This is breaking out. This was a low ADX pattern that went 3 or 4 years and then finally kicked in on this time frame. So it's not surprising to see this up a couple of years. So this is why that favorite pattern I talked about in the lesson, this is the perfect example of that. But it happened a couple of years ago when this actually kicked in. These low ADX patterns on 2 different time frames. So what we're doing now, what we'd be watching for now, are these pullbacks, which is still taking place on the weekly chart. You see all these pullbacks that we haven't had on the monthly, but we've had on the weekly. We need another pullback here, and that's really where I'd be looking for this. Great momentum condition on the weekly chart as well. And This actually did not have the 2 time frame low ADX condition in place. ADX never got low on this time frame, so it didn't really qualify for what I was talking about in the lesson. But that monthly chart alone is pretty important when you get a long low ADX like that. That's I think worthwhile to keep an eye on. So I would be looking for a pullback in this SFM at some point near the 18-week. Okay, so this was a question about the shorting this potentially, this Google. And let's just kind of put it in perspective. I mean, we've come up to this kind of double top area. We got a big tail here. Looks like we've got a little bit of resistance. Look at the monthly. You don't really have as much strength on this move as you did on this move. So, I mean, there's some signs that maybe this is getting a little tired. If we go to the weekly chart, look at what happened. We have a strong move to the upside, confirming ADX. Now we get a pullback and we make another new high here, and we don't have any strength. So I think you're barking up the right tree with this. All right. I just have a feeling that we're a little early on this setup. It's still not quite there. I mean, if you wanted to play this, you could have potentially done it off of this pinch, but you might want to wait for this to complete the 1, 2, 3 to the downside. So here's your 1, breaking the trend line. There's the 2. Let it complete the 3, which is taking out this move here, and then play the next rally after that. That would be probably a little bit safer way to do this. And in the process of completing what I'm talking about here, the 1, 2, 3, you will have broken the 18-week, and then maybe you have a little bit more room to the 18-month. I think that's probably your best bet. You still have to sort of assume there is some support here in the mid 130s, maybe, something like that. So got to be a little bit careful about being aggressive in some of these big stocks right now. But the makings are in place, and I think you're really, really seeing things early. I like that. I like the fact that you're seeing this lack of strength in the ADX early on, and I think this is a good stock to keep an eye on. It just might not quite be ready. All right, let's look at AFRM. So I kind of believe that this was a really pretty decent setup. It had a nice pullback, pulled back with good momentum conditions. Look at the volume pattern, strong to the upside. Pullback really was on lighter volume. I don't like all the volatility in place, but the pattern itself looked pretty good. And in fact, I've been talking about this with subscribers. So it went into the zone and then came out. This is right out of my course. It made a minor new low and then it reversed. So your entry is going to be one of these 2 days in here. You'd still be in using the approach that I use in my course, because I like to use an ATR approach to stop. So it's based on the stock's own volatility. That's going to determine. So if you did that and you entered in this area, your stop is going to be somewhere down in here. You still have a little bit of room to see this through. Now, because of this gap down, we really need this to turn up and get back through these moving averages. And I'd like to see another nice big green bar doing that. If not, if we just get like a light volume rally back up, this is maybe not a bad spot to maybe just move on. It's not following through the way I'd like to see. It kind of gave back a little too much off the earnings. So we'll just have to see. I mean, right now, I think you have to honor your stop and see if this can hold this support area. But overall, the pattern really doesn't look bad. But obviously, the 50 area, another big round number, we need to get through that. Okay, let's look at AMD real briefly. So we had a beautiful setup on this pullback to the 18-month line with a pinch play and improving momentum in ADX. And it came in the form of a zero line reversal with low ADX. This is right out of my course. This is the trigger 1. Break of the trend line. This big green bar was your entry. But look at what's happened since then. We are not testing the 18 anymore. We can't trade this off the 18 week. We have to use the daily. All right. I hope you guys, I'm repeating myself, because I think this is really important. Test of the 18, test of the 18, test of the 18, right? We have to play this off the 18 day, not the 18 week. And we do have a little bit of a reverse divergence showing up here. So this is kind of interesting. If this can hold 175, I would not be surprised to see this take another leg to the upside, maybe make a run up towards 200. I think that's what I'd be watching for on this. If we can make a move back up, maybe up through this minor little resistance at 180, I think we could get a little bit of a run to the upside. Thanks for watching the show. If you have any stock requests, and you can send them to stocktalk@stockcharts.com. You can also just post them in the comment area if you would prefer. Also, if you have an interest in learning more about these techniques in MACD and ADX, I would suggest going to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.